Good evening and welcome to Mortgage Coffee Talk. My name is Tahir Qureshi. I'm a principal broker and president of Canada Express Mortgage Inc., license number 13241. Tonight we're going to talk about benefits of home equity line. So watch the presentation. If you have any question, you can call 905-785-9926. or call my direct number 416-451-3489. I'll be more than happy to help you. But pay attention to this program. I made it short, so easy for you to watch. Go to my realtycoffeetalk.com or YouTube at the rate of Realty Coffee Talk and watch episode. There for you to watch and share and provide me feedback. Thank you. And let's start the program, and we're going to share the screen, and let's go there. Share the screen. Let's go slideshow. Benefit of home equity line. The homeowners. If you are a homeowner struggling with a monthly cash flow or high interest debt, a home equity line of credit we call HELOC can be a really strategic tool to regain financial stability. Here is how it helps. We're going to go one by one. Number one, drastically lowering your monthly payment. Drastically lowering your monthly payment because to replace expensive credit card debts, often 20% plus, or personal loan payments with a HELOC, lower interest rate, typically single digit, this can immediately reduce your monthly payment. Move the screen. Let me move the screen here. This can immediately reduce your total monthly outflows, freeing up cash for groceries, utilities, or mortgage payment. If you have a credit card, I have not seen many credit cards that give you less than 20%. And especially you have a student loans or other loans, car payments, other loans, you may have a lot of debt and you are managing many of these payments. So the best thing is to consolidate them. Consolidate, number two, debt into one manageable bill. Instead of juggling between multiple due dates, you remember we forget sometimes we have so many dates of payments, and we put on Google or we can put on our calendar. And if we miss them, it is reported on your credit bureau. So when you have a credit card payment, car loans, and medical bills, a home equity line of credit allows you to pay off those balances. You are left with a single predictable monthly payment, reducing the mental load of managing finances under stress. Believe me, it causes you a lot of stress when you are juggling through so many payments and so many deadlines that you have to make sure. Because if you do not pay on time, it affects your credibility. And when you're going for financing, you have a problem. Number three, interest-only payments during tough time. You know, most home equity line of credit offers an initial draw period, often 10 years, where you are only required to pay interest on the amount you use. You can keep your required monthly obligation as low as possible when your budget is tight. You can have a line of credit for 1 year, 2 years, or indefinitely. It depends on your relationship. Most home equity line, your bank will give it to you. because you are running a mortgage with them. If they don't give you the mortgage, then you may end up with a private loan. And that is also possibility, but it still will be cheaper than paying a high interest rate mortgage. So it all depends where you are banking, who has your mortgage. Are you dealing with a big, those 6 bank, or you are using a private line of credit? And you can use either way. They are home equity line. In private lending, you can negotiate with them and say, okay, I need 5,000 draw. You might have to pay a brokerage fee or lender fee, but one is paid, is money is available to you in terms of contingency. So only thing you will be paying interest. 4, pay interest only on what you actually use. Unlike a lump sum loan, where you pay interest on the full amount from the day one. You remember when you talk about second mortgage, there is a second mortgage term. You have a prime mortgage, you have a second mortgage. You have to draw the full amount. In this case, you have a home equity line of credit. You draw them based on your agreement with the lender. I'm a principal broker. I can help you to understand and arrange the loan accordingly to your need. So let's assume that you borrow only what you need, when you need it. If you need $2,000 to fix a leaky roof, you pay interest on $2,000, not on $50,000 if your line of credit is $50,000. Now it depends whether this line of credit is with the bank that has a mortgage, or you have exceeded the total debt ratio. That means you're more than 44%. The bank won't give you more money. You end up with a private financing. And I'm a principal broker of Canada Express Mortgage. I can help you license with FISRA. I can help you to get the financing. My license number is 13241. So this is the best. Instead of going on default or seeking funds from your family and friends, maintain your dignity. You have equity, draw the money against the equity. Number 5, avoid costlier alternatives, reverse mortgage or payday loans. Lots of people, for homeowners who do not want to sell or lose their home, a home equity line of credit is far safer and cheaper than high interest rate payday loans or little loans. Some payday loans can be 30% because they take a check and they give you the money. To avoid that, but if you have equity in your house, it is also more flexible than reverse mortgage. Remember that we talk about the reverse mortgage. There is an episode on my YouTube channel at realtycoffeetalk.com, or you can go to youtube.com at realtycoffeetalk and talk about the reverse mortgage. Reverse mortgage, you don't pay any interest, and bank will accumulate your interest that you're entitled to pay, but you don't pay at the time you dispose of the property. So reverse mortgage is more expensive than a home equity line of credit, as you are not forced to take a lump sum amount. Because on reverse mortgage, they fix your amount that you have to draw minimum. And this case, there could be a 5,000, could be 2,000, depends on your needs, and we can talk about that. So it's cheaper than reverse mortgage. It's cheaper than payday loans that you take your check for the. So avoid that costly. Number 6, preserve emergency cash in reserve. Instead of draining your saving account to cover a sudden expense, job loss, medical bill, car repair, you can draw from your home equity line. Because this is your money that you saved it by paying down your mortgage, your principal, your equity have increased. Instead of borrowing money from somebody, you draw money against your home equity line. If you have one with the existing lender, or it can be arranged. You can call my office 905-785-9926, and I can assign a mortgage agent, broker, to help you to secure that for you. Or you could call me, I can help you. You can go to express-mortgage.ca and you apply online. It goes to our platform and it's secure, and we will be able to help you. This keep your cash reserve intact for true emergency like your mortgage payment or utility bills. What they're saying is, if you have limited funds and you are budgeting it for your mortgage payment, you can draw more equity line because over the years you accumulated equity because you pay down the principal. Now, instead of stressing yourself to cover your contingencies, you draw the money. This is for you to use it. So preserve your emergency cash reserve if you have money to pay your mortgage, because you don't want it into default. Now, this is a warning sign. Sorry, go back. This is a important warning that I say that here. Important warning for homeowners facing affordability issue. Remember that. You know that I am also president and broker of record for City Pro Realty Inc. brokerage. I own the brokerage, just a brokerage. I'm a fellow of Rules Institute of Canada. I teach RAIC courses and also NAR courses at CIPS. So my goal is to educate you in this case, to learn about what's going on, so you are able to make educated decisions. So there are some issues with the home equity line. Number one, a home equity line uses your home as a collateral. So basically, you are collateralizing your home. But when you have a mortgage, you are collateralizing because you're borrowing the money against the property. So you are collateralizing. So I would not be too concerned. But if you fail to repay, you risk power of sale or power of sale. Because if you default on your payment, whether it's a home equity line of credit or mortgage, you run the risk of power of sale. Obviously, when we are, and this is why you're cashing your equity, you have surplus funds that you can pay the mortgage for a short period of time, 3 months, 4 months, 6 months, 1 year, whatever, or whatever your needs are, because you have plenty of equity. That is the purpose. But the risk is there. I have to educate you. The risk is there. But you have the same risk for the mortgage. So what's the difference? You got the more money, you can use it. Now, second, only use a home equity line of credit to lower your cost. Don't just do it for the sake of having the money. That is paying off high interest debt. If you have debts that high interest are, you can pay them off by using home line equity. Do not use it to fund lifestyle expenses or vacations. Don't do that. That's your saving. You are providing a shelter for your family. Your whole family is celebrating under this shelter. So don't do that. Save money and use it. This is for contingency only. This is very, very important to pay attention to this too. Home equity line is uses as a home as a collateral. If you fail to repay, you risk a power of sale. In Canada, is a power of sale. In the United States, is foreclosure. Now, two, home equity line is only used to lower your cost of monthly payment. Plus, you have a multiple payment. You eliminate and you just paid one on a monthly basis and interest only. So do not use it to fund your lifestyle expenses. I want to buy a fancy car. I want to travel. Don't do that for the home equity line. So type of loan, the Canada Express mortgage, because I'm a principal broker of Canada Express mortgage, license number 13241. Personal loans, auto loans, student loans, mortgage loans, credit builders loan. We have a debt consolidation, commercial loans, small business loan, land loans, line of credit, home renovation loans, construction loans, co-buying loans, equity sharing loans, alternative lending loans. We can arrange all of that. So start learning today. Go to realtycoffeetalk.com or youtube.com/realtycoffeetalk and watch their more than 423-24 episode for you to learn. Thank you for watching. My name is Tahir Aikreshi. This is sponsored by Canada Express Mortgage. I'm the principal broker, license number M08002130, and the founder of Canada Express Mortgage. Thank you for watching. Bye for now. So anyway, you have now watched this program, and I appreciate your feedback. Please feel free to talk to your friends and family. If you have any questions, please give me a call. I'm available anytime. You text me directly to my WhatsApp number 416-451-3489, or you can call my office 905-785-9926. We'll be more than happy to help you. Thank you very much for watching. I look forward to your feedback. Bye for now.